Ever imagine, like, your retirement savings multiplying? Not over, like, decades, but maybe even during your lifetime.
Sounds pretty good.
It does, right. That's the kind of growth Michael Saylor sees in Bitcoin.
Yeah.
And that's what we're diving into today.
Yeah, his interview with Tom Bilyeu.
Exploring his bold predictions.
Yeah, and why he thinks Bitcoin could really change the game for your portfolio. For sure. He makes some pretty big claims.
He does.
But it's not all hype.
Yep.
Like, he lays out some pretty interesting arguments, even analogies, to explain his reasoning.
Absolutely. So for this deep dive, we've got excerpts from that interview.
Okay.
Along with some of our own notes and research.
Yeah.
We'll break down the complex stuff into clear takeaways.
Yeah.
So you can see if his vision for Bitcoin aligns with your own investment goals.
So he starts by challenging, like, a basic assumption, how we think about money itself. He says we should really view it as, like, two separate things. Currency, which is what we use for daily spending.
Right.
And capital, which is meant for, long-term growth.
Interesting.
Yeah. And his argument is that traditional currencies, like the US dollar, are actually designed to lose value over time.
Because of inflation?
Yeah, because of inflation. It's not about getting rich quick.
Right.
It's about protecting what you already have.
Makes sense.
And he uses this pretty stark example that the US dollar has lost a staggering 99.9% of its value over the past century.
Why?
So if you're just holding on to cash, even in a stable economy, your wealth is slowly eroding.
Right.
It's like running on a treadmill.
You're putting in the effort. But...
You're putting in the effort, but not really getting anywhere.
Right. So where does Bitcoin fit into all of this?
Well, Saylor believes it's emerging as, like, the new gold.
Okay.
A safe haven for that long-term capital.
Right.
In an uncertain world.
In an uncertain world.
Exactly.
Yeah.
It's not about buying coffee with Bitcoin. Right.
It's about storing your wealth in a way that preserves its purchasing power over time.
Makes sense.
Yeah, like, think of it like owning a piece of beachfront property.
Oh, okay.
Its value tends to appreciate steadily, even while the dollar, like, fluctuates. He sees Bitcoin doing the same thing, but on a much faster scale.
Oh, okay.
So he compares Bitcoin's 60% annual growth rate to the steady 7% appreciation of scarce assets like that beachfront property.
Yeah.
He's not just talking about keeping up with inflation. He's talking about potentially outpacing it, like, significantly.
So potentially making a lot more money.
Yeah, exactly.
Now you might be thinking, if it's all about long-term growth, why are Bitcoin's prices so volatile? Right, because
a good question.
It goes up, it goes down, it goes all over the place.
Well, he actually thinks that volatility is a strength.
Oh, okay. That's a bit counterintuitive.
Yeah.
How does he justify that?
Well, he uses this analogy of a powerful turbine.
The faster it spins, the more energy it generates.
Okay.
He sees Bitcoin's volatility as attracting investors who are looking for, high returns.
High returns. Okay.
So that constant buying and selling, those price swings, they actually contribute to its overall growth.
Interesting.
Yeah.
That's kind of like a...
It's like a self-fulfilling prophecy in a way.
It is, right.
Yeah.
But isn't there a risk that those rapid price drops could wipe out people's savings? Especially if they need to access that money in the short term.
Yeah, that's a valid concern.
Yeah.
And it speaks to his point about Bitcoin being for long-term capital, not your, like, emergency fund.
Right.
Right. He's not advocating for putting all your eggs in one basket.
Okay.
But he does argue that the volatility is a natural part of a new and rapidly growing market.
Okay, so that's kind of to be expected then.
Kind of, yeah. Okay. It's like, he uses another interesting analogy to kind of illustrate this point.
Okay.
He says, imagine if you could trade your Manhattan apartment as easily and quickly as you can trade Bitcoin.
Gotcha.
The price would, like, likely be much more volatile.
Oh, okay.
Because people could react to news and events much faster.
Yeah.
Right? So the relative illiquidity of traditional assets,
like real estate,
masks their true volatility.
Okay, that's a good point.
But with Bitcoin, you can buy or sell it 24/7 anywhere in the world.
Right.
So those price swings are much more visible.
I see. So how does this tie into his own company, MicroStrategy? Didn't they go all in on Bitcoin?
Yes, they did.
Yeah.
And he sees MicroStrategy as like a bridge between those traditional investors and the world of Bitcoin.
Gotcha.
They issue securities backed by Bitcoin, which allows like institutions, even those with strict investment rules, to get exposure to Bitcoin without directly holding the asset.
Interesting. So they can get in on the action.
They can get in on the action.
Without actually having to buy the Bitcoin itself.
Yeah.
He claims this approach played a key role in MicroStrategy's stock performance.
Right.
Even surpassing the returns of the S&P 500.
Mm-hmm.
It's an interesting strategy, essentially using a traditional company
as
a vehicle for Bitcoin investment.
And it speaks to a larger trend.
Right.
The world is looking for ways to tap into this new asset class.
Yeah.
Even if it takes some creative solutions.
Mm-hmm. Yeah.
Now, there was a lot of talk that the approval of a Bitcoin spot ETF would make MicroStrategy's model obsolete.
Okay.
But Saylor argues that ETFs and operating companies are fundamentally different.
Wait, before we go any further,
yeah,
can you explain what a spot ETF is?
Sure.
For those of us who might not be familiar with the term.
A spot ETF, or exchange-traded fund, is a type of investment fund
that
tracks the price of an underlying asset.
Okay.
In this case, Bitcoin.
Gotcha.
You can buy and sell shares of the ETF on a stock exchange, just like you would with a company stock.
Oh, okay. Okay, I get it.
Yep.
So why wouldn't a spot ETF make MicroStrategy obsolete?
Because ETFs are limited in what they can do.
Okay.
They essentially just hold the asset.
Gotcha. So MicroStrategy as an operating company has much more flexibility.
Exactly.
So they can make strategic decisions about when to buy or sell Bitcoin, how to manage their holdings, and even leverage their position to potentially magnify returns.
Yeah.
It's kind of like a real estate developer who can buy and sell and develop properties to maximize their profits compared to just passively owning one rental property.
Exactly.
Yeah.
And Saylor points out that MicroStrategy can do things like borrow money at low interest rates and invest it in Bitcoin.
Right.
Something an ETF can't do.
Right. It's a much more...
it's a more active approach.
Active approach, yeah.
And it seems to be attracting a diverse range of investors from Bitcoin enthusiasts to those just looking for a way to capitalize on the volatility.
I see. So it's almost like they've created their own ecosystem within the traditional financial system, fueled by Bitcoin, but operating with more agility and freedom.
Right.
It's definitely an interesting case study in how traditional finances is adapting to this new technology.
But it's not all smooth sailing.
Okay.
One of the big questions that often comes up with Bitcoin is what happens if quantum computers,
with
their immense processing power, manage to crack the cryptography protecting Bitcoin?
That's a scary thought.
Right?
Could all those Bitcoins suddenly become worthless?
Well, Saylor argues that it's a broader technological challenge, not a Bitcoin-specific issue. He believes that the global tech community would develop solutions if quantum computing posed a real threat to cryptography.
So it's not just a Bitcoin problem.
Right, exactly, like a abstract. Like, if quantum computers could crack cryptography, companies like Google, Microsoft, Amazon would be the first targets.
Of course.
Their entire digital infrastructure depends on, secure encryption.
Secure encryption, yeah.
So the issue of quantum computing goes far beyond Bitcoin.
Right.
And just like we've adapted to other technological threats in the past, Saylor believes we would find ways to secure data against quantum computers.
Makes sense.
He compares it to the evolution of language or math. If someone found a way to hack your phone and send fake messages, you wouldn't abandon English. Right. You'd adapt. You'd find ways to secure your communication.
Absolutely.
So he's arguing that the core principles of Bitcoin are durable and will adapt to new challenges.
Oh.
There's a fascinating argument and one that highlights the inherent resilience of decentralized systems.
But even with all of these arguments, there are still plenty of people, even very influential people, who remain skeptical about Bitcoin.
Absolutely.
Yeah.
For sure.
Right.
You're right. Skepticism about Bitcoin is, it's still pretty widespread.
Yeah.
Saylor even talks about presenting his Bitcoin strategy to Microsoft.
Okay.
And they just flat out rejected the whole idea.
Really?
Yeah.
It seems that even in the tech world, embracing a truly disruptive innovation can be A tough sell.
Yeah, it can be tough.
Why? Why does he think that is? Is it just fear of the unknown?
Maybe.
Or is there something something deeper going on?
Well, Saylor has an interesting theory about this. It
Yeah.
says understanding Bitcoin is on a need-to-know basis.
Need-to-know basis. Okay.
Yeah. The people who really, get it,
Yeah.
who are truly enthusiastic, are often those who have experienced the downsides of, traditional finance.
So you mean like people in countries with
Yeah, like hyperinflation.
hyperinflation, right? Or those who've had their assets frozen by governments.
Exactly.
So they understand the need for a system like Bitcoin.
Yeah.
In a way that someone living in a stable economy might not.
Exactly. It's like
Yeah.
it's like the difference between knowing about fire
Right.
and actually needing it to survive.
Right. You don't
If you've never felt the burn,
Right.
you might not fully appreciate its power,
right.
you know?
That makes a lot of sense.
Yeah.
If you've always been comfortable
Mm-hmm.
in the existing system,
Right.
you're less likely to see the need for a radical alternative.
Exactly. And Saylor argues that this is why
Yeah.
many established players,
Like Microsoft.
like Microsoft in that example, are slow to embrace Bitcoin.
Okay.
They're comfortable. They haven't felt the pain points
That pain points.
that make Bitcoin so appealing to others,
Right.
you know?
But he doesn't think that comfort will last forever.
He doesn't.
He draws a fascinating parallel
Okay.
to the rise of rock and roll.
Okay.
Back in the day,
Yeah.
many classical musicians dismissed it as,
Yeah. Just noise.
noise,
Too simplistic.
not real music.
Not real music.
But rock and roll went on to become
A global phenomenon.
a global phenomenon.
Totally changed the music industry.
Changed it forever
Forever. And he sees a similar pattern playing out with Bitcoin.
with Bitcoin. Yeah.
The early adopters, the ones
Boy.
who see the potential even amidst the volatility
Mhm.
and the uncertainty, they are the ones who will shape the future of finance.
The ones who take the risk.
Exactly. Those who cling to the old ways risk, being left behind.
So,
Classic story
classic story.
of disruptive innovation.
Disruptive innovation, yeah.
But Saylor doesn't just stop at, predicting Bitcoin's success.
Okay.
He has some pretty bold ideas about how it could be leveraged on a national scale.
This is where things get really interesting.
This is where it gets interesting.
He lays out this provocative plan for the U.S. to sell its gold reserves
What?
and invest in Bitcoin instead.
Wow.
He claims this would solidify America's economic dominance for the next century.
That's a huge gamble.
It is, right.
Yeah.
I mean, gold has been a cornerstone of global finance for centuries.
For centuries, yeah.
What makes Saylor so confident that Bitcoin can replace it?
Well, he believes gold is an outdated relic.
Okay.
It's difficult to transport, store, verify, and divide.
It's not very
And governments can influence its price and accessibility.
it's not very practical.
No, not really.
Bitcoin, on the other hand, is
Digital
digital scarce.
and resistant to censorship and control.
Okay.
He sees those qualities as making it a far more efficient and reliable store of value,
I see.
especially in the digital age.
But wouldn't selling off all that gold destabilize
It's possible.
the global financial system?
Yeah, it could.
I mean, that's a pretty drastic move, and it seems like it would have some major ripple effects.
He acknowledges the potential for disruption, but he argues that the long-term benefits outweigh the short-term risks.
Okay.
He believes the U.S. is in a unique position
Okay.
to lead this transition to a digital-first financial system.
So what does this transition actually look like? What's his vision for a Bitcoin-powered U.S. economy?
Well, he proposes a two-pronged approach.
Okay.
First, the U.S. would issue a stablecoin
Okay.
backed by U.S. treasuries and pegged to the dollar.
Okay.
This would create a bridge
Okay.
between the traditional financial system
Mhm.
and the world of digital assets,
Okay.
making it easier for people to, participate in the digital economy.
Okay, I'm following so far.
Yeah.
A stablecoin would provide the stability and familiarity of the dollar
Right.
while still leveraging the benefits of blockchain technology.
Exactly.
But what about the Bitcoin part?
Well, that's the second part of his plan.
Okay.
Alongside the stablecoin, the U.S. would establish a strategic Bitcoin reserve. They would essentially be investing in Bitcoin as a national asset.
Interesting.
much like they currently hold gold reserves.
So the U.S. dollar becomes the global digital currency,
Right.
flowing through billions of devices, and the U.S. government benefits from the appreciation of Bitcoin.
Yeah, that's the idea.
It's a bold vision, but it also
It does.
raises some concerns. For one thing,
Yeah.
centralizing control over a significant portion of the Bitcoin supply seems to contradict the very ethos of decentralization that makes Bitcoin so appealing in the first place.
It seems to go against that, yeah.
And wouldn't giving the U.S. government that much control over a global digital currency create opportunities for manipulation and abuse?
Yeah, it's a valid concern.
It's a powerful tool.
It is.
And power can be easily misused.
Those are all valid points.
Yeah.
And it's important to remember that Saylor's vision is just that, a vision.
It's a...
There are a lot of political, economic, logistical hurdles to overcome.
It's a hypothetical.
Yeah. But even if his plan isn't adopted, like, wholesale, the ideas he's presenting are, they're thought-provoking.
They are, yeah.
He's challenging us to, like, rethink the role of money, capital, and technology in our lives.
He's really advocating for a fundamental shift in our understanding of how the world works.
Exactly. He even goes so far as to compare Bitcoin to, like, groundbreaking technologies. Like electricity and clean water.
Yeah.
He sees it as a force for good that can address, like, economic challenges and empower individuals around the world.
It's a very optimistic outlook.
Yeah.
But what about the potential downsides?
Yeah.
We've all heard concerns about Bitcoin's energy consumption, its potential for illicit use, and the possibility of unintended consequences from such a radical shift in the global financial system.
Oh, right.
How does Saylor address those criticisms?
Well, he doesn't exactly shy away from those criticisms. In fact, he directly addresses the whole energy consumption thing. He argues that it'll become more efficient over time. As the technology improves and renewable energy sources become more prevalent.
He also pushes back on the idea that Bitcoin is primarily used for illicit activities.
Yeah, he points out that most criminal activity still relies on traditional currencies. And that the transparency of the Bitcoin blockchain actually makes it a poor choice for those trying to, like, hide their tracks.
It's all out in the open, right?
Yeah, exactly.
But it's still a big leap, right?
It is.
To go from using Bitcoin for, like, individual transactions to using it as the foundation for an entire national economy.
Yeah.
How does he see that transition happening?
Well, he believes it's a natural evolution. He draws a comparison between Bitcoin and gold. Yeah. But he actually argues that Bitcoin is like a superior form of money in the long run. He says gold has a half-life. Meaning its value proposition slowly diminishes over time.
I remember him saying that gold is stuck in the past.
Yeah.
It's difficult to transport, store, verify, and divide.
All those.
Plus, governments and central banks can, influence its price.
Absolutely. He sees Bitcoin as a starkly superior alternative. It's digital, it's got a fixed supply, capped at 21 million coins. And it's resistant to censorship and control. These characteristics, he argues, make it a far more efficient and reliable store of value, especially in a digital age.
So in Saylor's view, it's not a question of if Bitcoin will replace gold, it's when.
He uses this, interesting analogy of a mountain lake to illustrate this concept of efficiency. Imagine all the capital in the world, trillions of dollars, locked up in real estate, stocks, bonds, all those assets, as water trapped at a high altitude.
I'm picturing this vast lake high up in the mountains. Representing all that trapped capital.
Now imagine Bitcoin as a channel, like carved into the mountainside, allowing that water to flow downhill towards a more efficient state.
I see.
That flow represents, like, capital moving into Bitcoin, drawn by its superior qualities as a store of value.
So he's basically saying that Bitcoin is like the natural endpoint.
Yeah, in a way.
All that capital will eventually find its way into Bitcoin because it's simply a better system.
We believe so, yeah.
And he even uses that same analogy to explain why Bitcoin's volatility isn't a bug, but a feature.
Exactly.
The faster that water flows through the channel, the more energy it generates. Similarly, the more people use and trade Bitcoin, the more robust and valuable the network becomes.
Exactly.
It's a bold claim, but I can see how the analogy works.
It's an interesting way to think about it.
He's turning the traditional view of volatility on its head, seeing it as a sign of growth and dynamism, rather than something to be, feared.
And this brings us back to his vision for a U.S.-backed stablecoin, alongside a strategic Bitcoin reserve.
He believes providing a regulated dollar-denominated stablecoin would create a bridge, between the traditional financial system and this emerging world of digital assets.
Exactly.
He sees it as a way to onboard billions of people globally into a dollar-centric digital economy, extending the reach and influence of the U.S. dollar in the process. At the same time, by holding a significant Bitcoin reserve, the U.S. could benefit from the appreciation of this emerging asset class, potentially offsetting its debt and solidifying its financial dominance.
That's the idea.
It's a grand vision.
It is a grand vision.
But is it realistic?
That's a good question.
Can a centralized entity like the U.S. government truly embrace a decentralized technology like Bitcoin without compromising its core principles?
It's tough to say, for sure.
Isn't there a fundamental contradiction there?
There's definitely a tension there. Saylor acknowledges that governments tend to be slow to adopt new technologies, often resisting change and innovation.
They like to stick with what they know.
Exactly.
But he also believes that the potential benefits of embracing Bitcoin, both economically and geopolitically, might be too significant to ignore.
It's possible.
So it comes down to a classic risk-reward calculation. Is the potential upside of being an early adopter of this transformative technology worth the risk of destabilizing the existing system?
And that's a question, we all have to grapple with individually. We can choose to wait and see how governments and institutions navigate this whole transition. Or we can dive in and explore the world of Bitcoin for ourselves.
That's the empowering thing about this technology, right?
Yeah, I think so.
It gives individuals the ability to opt out of a system they no longer trust. And participate in a global decentralized network. Whether or not you agree with Saylor's vision for the future, you can't deny the impact Bitcoin is already having on the world.
Absolutely.
So as we wrap up our deep dive into Michael Saylor's world.
Here's our final takeaway for you.
Okay.
Don't just dismiss his ideas as radical or unrealistic. Engage with them. Research them.
Challenge them.
Right.
The future of finance is being shaped right now.
And it's up to each of us to understand the forces at play.
We've covered a lot of ground today, from Saylor's distinction between currency and capital.
We have.
To his bold vision for a Bitcoin-powered U.S. economy.
It's a lot to take in.
Yes.
But hopefully this deep dive has given you some new insights and perspectives on the potential of this revolutionary technology.
And remember, the most important step is to do your own research. And form your own conclusions.
Exactly. Don't just take our word for it. Or Michael Saylor's, for that matter. Explore the world of Bitcoin.
Ask questions.
And
decide for yourself. Whether it deserves a place in your life.
That's it for today's deep dive.
We'll be back soon with another exploration of a fascinating topic.
We'll see you then.
Until then, keep learning, keep exploring, and keep challenging the status quo.
Absolutely.